Have you been thinking about what it takes to go from residential real estate to commercial real estate, but you're not sure you understand the steps or the level of professional, financial, or emotional commitment required? Well, today that's what we're going to talk about. On previous chapters, we talked about what it takes from a technical side to transition your career. However, today what we're going to do is go into what it actually takes: liquidity, relationships, and expertise. How do you transition from residential to commercial real estate is something that I'm asked almost every week. Well, there's a couple of different ways that you have to think about it. First, you have to break up, are you talking about residential agents to commercial agents? An agent brokers a building or brokers a tenant between properties? Or are you talking about the principals, the investors, the developers that buy, invest in, renovate, and develop the properties? Stepping back for a moment, common educations, all different types of backgrounds are found in the business, from business people, finance, accounting, marketing, but you also have engineers, communication, you even see history folks, you see retired people. There's no precursor that you need for an education, but depending on what you specialize does matter. From there, you think about other common professions before becoming an agent who makes money for fees or an owner who puts their money into the deal. You also have architects, engineers, and just different professionals in the business that learn their niche very good and then later say, I want to be a player making deals or making investments and broadening the horizon, while an architect's background can of course be helpful as a developer. Starting with residential agents, working on houses, what you're going to find there, bunch of small deals, people are very emotional, a lot of transactions, a lot of quick deals, contracts in a project, in and out, 30, 60, 90 days from listing to sale. And the emotions and the things that drive that market and that ability are more dealing with people. Once a residential agent would go and move to commercial, some of the things they'd have to realize are that the competition is going to be much more fierce. The dollar signs are going to be much higher. The level of expectation from your client is much different. You're no longer working with, a family that's excited, sees a home on a Saturday and says, let's make an offer. Your clients are now likely smarter than you are because the amount of wealth they've had to accumulate in order to own a portfolio of buildings and buy a bunch of buildings. And they're going to want to know, is my commercial agent professional? Does he understand the nuances of commercial real estate from legal, financial, tactical, and does he have enough experience and wisdom in both life and really business and commercial real estate to get through the whole project? That's because commercial transactions, whether they're leases or sales, can often take at least 6 months. And in some cases, I'm working on projects right now where it took 10 plus years to do the project. On the brokerage side, though, sometimes you'll sign up a lease and a building have to be built, so you won't get paid and the deal won't get closed for 2 years. So be ready for that. Other things on the agent side to understand is that the modeling and financial side is much more intricate. You need to know common things like what is your cash on cash, or the amount of money you put in relative to the money you get out. What's your IRR? How much money do you put in up front relative to how much you get out each year, and then how much you get on the sale. And then other metrics like loan to value, debt service coverage ratio, a lot more technical covenants on the financial side, how to use Excel, how to read contracts. Working with lawyers on the commercial side is totally different. On residential, you get one form contract and you use that all the time. On commercial, every deal is different. And then from a brokerage, what to expect perspective, some residential agents can do very well, hundreds of thousands of dollars. Some can make millions. On the commercial side, it is more common to make a lot more, but it's a lot harder work. The hours are more grueling, the expectations are more grueling. You can get into residential real estate 3, 6, 12 months. In commercial, expect to take several years until you start to build up enough transactions to where you're actually making any real money. Moving over to the principal side, or a principal can be an investor in a building, an investor in land. That can be land that needs to be built on, or it can be an existing building with a lot of cash flows. That's the range. However, if you're a developer, you're then buying that land, putting more money, more risk into it, and then having high risk but high return. In order to transition as an investor from buying residential homes into commercial projects, it takes even more than doing the real estate agent brokerage side, because the amount of relationships, liquidity, and expertise that are required to own commercial property is far more challenging to accumulate. Starting with the relationships. You can't focus on residential, you sell a house, you're kind of one and done. You get a lease done on a residential, you're one and done. On commercial, to have any chance, you have to focus on the relationship first over the transaction, and that means long time focus, lifelong focus in the relationships. Because if you're one and done on that valuable relationship, you're not thinking about it right and you're not going to be successful. Especially considering the rest of the parties are sophisticated like you are. So they're not going to want to get into a situation where they feel like you're just in there to get a quick deal done and get out of it. Focus on win-win situations. Focus on how do I add value. Focus on, will this attorney or architect or vendors as the investor, will they be in my portfolio, in my database for the rest of my life? Likely. In commercial real estate, you can expect that. The ownership period and the duration is totally different as well. On residential, you can buy a house and expect to sell a house in 2 or 3 years and book a profit or not book a profit. On commercial, it's very common for a 5-year underwrite, a 10-year underwrite, to use those as a benchmark to study your return on investment. With that said, plenty of investors look at these things as lifelong investments or even generational investments. Right now, we're working with partners and we've got assets that we're saying, hey, we might sell this in our lifetime, or it might be a generational asset going on to future children, and that because the nature of the development in the larger projects. When you're also looking at commercial investments, the expectation is far more, should I diversify? Meaning that you're typically going to have some money in stocks and bonds in regular cash, and you're going to balance that with a commercial real estate portfolio that will supplement and balance your risk because the drivers are different. Can you take that money and put it into commercial real estate where the same amount of money could be in one portfolio across 1,000 stocks? You've now got it in 1, 2, 3, 4, 5 properties, 10 properties until you get large enough to be like private equity or roll up to a REIT or institutional investor. That portfolio is going to take a lot longer and you're going to have a lot more thought into the strategy. For example, is your investment strategy geographically focused or focused on asset class? When you're buying residential, you've got some geography, but really you're either buying houses or condos. That's what you're doing. On the commercial side, the economic drivers for each asset class are different. You've got office and industrial, which are employment facilities at the end of the day. Office, of course, brings people together to work on projects that require emailing, sitting in a desk, working in close proximity. Industrial, of course, is more about manufacturing, warehousing, logistics. And those two asset classes are what brings employment to a new market. So if a market is growing, you will focus on how many businesses relocated to XYZ market. If that is happening and you know it's a growth city, then what you can do is say, okay, therefore multifamily, townhouses, and single family, all forms of residential, are going to follow the commercial employment drivers. Single family is more a lot of land, suburban, near corporate headquarters out of a center. But as you get to the urban core, what you're going to focus on is more multifamily and dense. And that's because you're closer to downtown and the property values are much higher. So the rents per square foot have to be much higher. Once you've gotten through your residential, the last way to think about the final phase is what's going to service all these people. That's how retail fills in on the major roads, whether it's a freestanding fast food or whether it's a large mall or a shopping center. Those retailers and commercial tenants are going to follow the multifamily and the residential. Just like other specialty asset classes, self-storage, medical, surgery centers, education, fitness, those specialty niche are going to follow the residential growth, which was following the employment growth. Once you've determined that I'm going to go from residential to commercial, and you appreciate that you're either on the advisor or broker or agent side, or you're on the principal side, you then have to realize, what is it going to take to be mentally prepared for this transition, economically prepared, and professionally ready to make that move. Starting with the professionalism that's required, it's far more professional on the commercial side. You treat yourself like your suit and tie. You're going to treat yourself most of the time like this email needs to be written as if I'm an attorney. You're working with CPAs. You're working with all different other types of professionals. Emotionally, you have to understand, whether you're an agent or an investor, that the level of expectation is probably a 3 or 4x in how hard it is and how grueling it's going to be. Again, as an agent, it can take 6 months to a couple of years to get paid on a fee. Most people can't wait that long. However, it's not uncommon to have commercial fees from tens of thousands to hundreds of thousands to millions of dollars that then get split up between the organization and the team that actually worked on the transaction. On the investor side, it's even crazier. You can sometimes put out hundreds of thousands of dollars pursuing a project idea, and then the project just dies out, or people change their mind, or the market shifts. And when you invested $500,000 into an architect for a large project that now the demand for housing has dropped off on your mid-rise, well, those plans aren't worth anything because the project's no longer economically viable. So that level of emotional and financial challenges are something that you're going to have to realize, like, that's going to happen more times than big successes. But when the big successes happen, sometimes they can be great, because sometimes you'll have your rent in place and the market will shift and the demand for that asset will go up a lot, and you'll have a multiple times return on your investment, or 3 to 5 times what you put into it. In a lot of businesses, including this one, doubling your money is very good. Commercial, you can do even more than that. But what you have to understand is there's probably half a dozen scenarios to get there where you lost money. And that's on the development side. Of course, if you want to de-risk, you can move from opportunistic investing and development, the most risky form, to something like value add, where you're focusing on, how do I buy a property, have some income so I reduce my risk, but I realize that I want to make the property more valuable. There's a lot of ways you can make property more valuable. You can increase the rent, you can decrease the expenses, you can change the financial ownership structure. The creativity, the sky is the limit. But when you go into it, you have to appreciate, this is what I've got, this is where I want to get it to, and this is how I'm going to do it. You're making a business plan for each investment, whether it's a development or an existing building, and you're adding value by focusing on, how do I get it to have the most bottom line free cash flow? Because the more bottom line free cash flow, the more the project is worth. And that's your overall goal, which is to create value for everyone involved. Once you're through with value add, then your asset can turn into something that's a core investment. And what a core investment typically means is it's low risk, low return, it's fully leased up, you've often got credit tenants, it's in a tremendous location. Think density, hard to get to, hard to replace. Why is that so important? Because when you have that, your risk is lower. If your property's in the middle of nowhere and your tenant leaves, you might have a problem. You're probably gonna have a problem, right? But if your building is next to the urban core, right downtown, a major market, you paid more for it. There's no question. But when that tenant leaves, the odds of having another tenant will increase. Those are the 3 forms: opportunistic, value add, and then core. Those are different strategies. The other thing you can do is focus on niche or submarkets, Tampa, Florida, the state of Florida, East Coast, and different geographic strategies. No matter what, understand on the commercial side, you're going to have actual strategies, while on residential, it's going to feel a lot different and be a lot less sophisticated. In summary today, we've discussed how to be an agent, residential, and go to commercial, or how to be an investor and go from residential to commercial. Either way, focus on liquidity, relationships, expertise, finding your niche, and most importantly, you have to love what you do. Because in this business, there's no, I'm showing up for work. It is what you do, and what should happen is you should enjoy it so much. And the skill sets that you need, whether it's communication, analytics, design, should be something you enjoy so much that the word work goes away and it becomes who you are. You take what you're good at, what you like in different areas, and that's what allows someone to go from residential to commercial, is they make a commitment. I love real estate. I want to make that my career. However, I don't want anyone else complaining about the size and shape of the bathtub. Because the size and shape of the bathtub is what the mother gets upset about when her father's buying a home. On the commercial side, what you're talking about is making or losing millions of dollars, and that's a far more professional, far more serious thing. And in order to have any chance of being successful at either commercial agent or commercial investor, it has to be a lifelong dedication, and you have to be willing to show up before everyone and leave after, and willing to learn every day, and willing to understand that I'm going to have so many failures before I start having successes. And if you're not willing to quit, you'll never fail, is a way that I thought about it when I got into the business. And I said to myself, it doesn't matter. Like, this is what I'm going to do no matter what. And for me, for some time, I had to work on a lot of residential. I had to broker a lot of deals, and I had to focus on how to grow relationships, liquidity, expertise. And then in time, in America, we're fortunate in a free market with good legal infrastructure, good zoning, political, all that infrastructure. It allows you, if you show up every day, do what you're doing, have a plan and execute, this country can make you successful. If you have any more questions, feel free to comment below, subscribe, and turn on notifications.